Good morning, good afternoon, or good evening, everyone. My name is Richard de Belder, and I'm an advisory board member of Islamic Finance Council, and I'm delighted to welcome you to today's event on green and sustainable Sukuk. By way of background, the Islamic Finance Council has long been a proponent of Islamic finance being part of the ethical finance space, and as a leading voice in the Islamic finance industry for SDGs and the broader ESG movement. We've timed this series to give Islamic finance a voice at the United Nations General Assembly. Now, this series is built on the work of the Global Islamic Finance and SDG Task Force, which we launched together with the UK government and ISDB in 2020. As part of this initiative, Islamic Finance Council has produced various reports which are on our website, so feel free to have a browse at them. I'd like to say thanks to our various partners: His Majesty's Treasury, DD Cap Group, Emirates NBD, Gadas Bank, Global Ethical Finance Initiative, Islamic Development Bank, London Stock Exchange Group, and the United Nations. Now, today's session is going to be looking at green and sustainable Islamic Sukuk through a capital markets lens, and I'm delighted to be joined today by experts from our high-level working group on green and sustainable Sukuk that was launched in Glasgow at COP26 in partnership with the London Stock Exchange Group and the Ministry of Finance Indonesia. Mustafa Adil, Head of Islamic Finance at London Stock Exchange Group, will kick off the session with a preview of a forthcoming report on green Sukuk. This will then be followed by a panel discussion, which I will chair, featuring Raja Amir from HSBC Amanah Malaysia, Hitesh Asarpota of Emirates NBD, and Sam Dodd from the London Stock Exchange Group. Feel free to engage in the discussion via the chat box and on social media using the handle at UK_IFC, using the hashtags #IFSDG22 and #UNGA77. Questions should be submitted via the Q&A function, and should time permit, we'll try and get through a couple of questions from the audience. Now, at this stage, therefore, I'd like to hand the session over to Mustafa, and he can give his presentation on the forthcoming report.
Thank you very much, Richard, for that kind introduction, and good evening, good afternoon, and good morning, ladies and gentlemen. It's my pleasure to be with you here today. And as Richard mentioned, I will be giving you a quick overview of an upcoming report that we have done in collaboration with the high-level working group members that focuses on green and sustainable Sukuk. And if you bear with me, I'm just going to quickly share my screen and, cross my fingers, hoping that technology does not fail us, as, unfortunately, sometimes it does. Richard, I will trust you that if anything happens to my presentation, you will just reach out and let me know. But with that, I hope you can all see my screen, and I will walk you through some of the key findings of the report, which can hopefully serve as some background and context to the discussion that Richard will have with the esteemed panelists in this session. So by way of introduction, this report is something that originated out of the high-level working group on green Sukuk that was launched. And the purpose of the report is really to provide some context and overview at the current state of the Sukuk, green and sustainability Sukuk market, and give some direction or recommendations that can feed in to the activities of the high-level working group to ensure that their initiatives are aligned with the needs of the market. The report is consists of a combination of primary and secondary research being desktop research, but the primary research being a combination of contributions from the working group members, interviews with executives in the market, and a survey that has been conducted that has given us some very, very interesting insights as to how market players and practitioners are perceiving the green and sustainable Sukuk market. The report is actually going to be launched on the 24th of October, but we have the opportunity now to present some of the key findings and some of the high-level outcomes that are coming out, and we hope that you will look for the report once it's launched, and it will be available on the GEFI and UKIFC website, the Refinitiv and LSEG websites, and the websites of various partners that have worked on the report through the working group. As I mentioned, the purpose of the report is to feed into the activities of the high-level working group and being able to identify and address some of the challenges that exist within the green Sukuk and sustainability space. In terms of insights, we looked at the overall market. We looked at the conventional bond market as well, and it was a fantastic time because the conventional bond market exceeded for the first time $1 trillion in 2021, which was a huge milestone. And we're seeing that projection also grow in Sukuk as well. Sukuk issuances, particularly green and sustainable Sukuk issuances, have continued to increase over the last few years. And whereas overall Sukuk issuance is expected to decline this year, green and sustainable Sukuk are expected to continue to grow despite the current macroeconomic environment that we find ourselves in, to set a new record for this year and continue to evolve going forward. We have looked at the types of issuances that have taken place in the market. We have looked at, which markets, which countries they've come from. We've profiled some of the interesting and some of the larger issuances that are taking place, whether those are sovereign, whether those are corporate or from supranational institutions like Islamic Development Bank or others. We've looked at demand side, and there is a significant increase in demand when it comes to green and sustainability Sukuk compared to conventional or traditional Sukuks that are in the market, which is a very interesting insight. And we go into the demand drivers in more detail in the report, which you can see once that gets launched. We do the profiling of the Sukuk by corporate versus sovereign, and we look at the issuances. We've looked over the years between domestic and international issuances to see how that market has evolved. And what is very, very interesting is that corporate issuances in green and sustainable Sukuk are quite prominent. So there's a lot of issuances that take place. In terms of total value, they represent 36% of the total Sukuk issued, but in terms of the number of issuances, they are over 90%. So we see a lot of corporates that are very, very active in this space that are pushing and promoting the implementation of green considerations, ESG considerations, sustainability considerations within the issuances of their Sukuk instruments. And more detail on this is provided in the report, along with insights and interviews with some of these corporates as to the driving force behind their incorporation of these elements in their issuances. We also conducted a survey where we looked at various different institutions, whether those are investors, whether those are primary dealers in the market, arrangers, and other stakeholders. And we looked at the incorporation of ESG mandates and ESG considerations within the broader consideration when Sukuks are being issued or invested in. And we saw some very interesting insights. 54% of the investors that we surveyed have incorporated some form of ESG consideration or criteria within their Sharia compliant portfolios. 46% of investors are looking at second party and third party opinions and using different tools to evaluate the green and sustainability credentials within Sukuk. And 42% of investors said that the reporting and screening criteria was a key barrier or limitation for them when it comes to investment in this space, right? And a lot of these insights, along with the executive interviews that have been conducted, have flowed into the recommendations that we are going to be looking at and presenting in some detail in this report. And I just want to give you a very, very high level overview of how the recommendations are structured, right? And they essentially fall into three different pillars for us. The first pillar is around promoting common regional international standards, right? And that you can see flows directly from the outcomes of the surveys that have taken place. And we have various different initiatives or recommendations that sit under that are geared towards, bringing common standards and removing that as a barrier of entry within the ESG or green Sukuk space. The second pillar is around building capacity with issuers and enhancing the broader ecosystem. And that really is about, it's geared towards increasing issuance volumes, because even though, issuances are increasing, they still are a very, very small percent. I believe only 4% of the overall Sukuk market. So there's a lot of room for growth and a lot more implementation that can be done to increase the volumes. And then secondly is around innovation, utilizing different aspects of Islamic finance and Sukuk structures to be able to enhance and innovate in this space. And then lastly, the third pillar is around expanding the investor base beyond traditional Sukuk investors. How do you profile and spotlight the credentials of green Sukuk, sustainability Sukuk within the broader green investment circles and broader sustainability investment managers and others? And that becomes a critical barrier, just like Sukuk has been positioned with conventional investors. And we know that about 50% approximately of all Sukuks issued sit with conventional investors that are not particularly Sharia sensitive, but they're attracted to the structure and the profile of that as an investment instrument. So too, we must bridge the gap between green and sustainability Sukuk and the broader green and sustainability investors, so that we can tap into a much broader audience. These are some of the high level recommendations that are coming out of the report. I won't go into too much detail on them right now, but please, I highly recommend that you look out for the report and you go through some of the insights and recommendations and the profiles that we've done in more detail, because that can help to give us a benchmark as to where we stand today, what challenges exist, where does the ecosystem stand, and how we can drive it forward. And we're very, very hopeful that the members of the working group will benefit from this and will use it to inform and feed into their strategic initiatives that they will be rolling forward, and the broader market can benefit from these insights as well. With that, Richard, I'm very happy to hand over back to you and the fellow panelists, and looking forward for the rest of the session. Thank you very much.
Thanks very much, Mustafa. The report is clearly going to be very interesting to read. And as you mentioned, it's going to be issued, I think, in Dubai on Monday, the 24th of October. So I think there should be, if there haven't been already, some details in the chat box for a link with more information, which I think Chris Tate's going to be putting up. Okay, let's move on to the panel session. We've got, as I mentioned before, three experts: Raja Amir, CEO HSBC Amanah Malaysia; Hitesh Asarpota from Emirates NBD; and Sam Dodd from the London Stock Exchange Group. I think there are a few areas that we can touch upon. One would be perhaps the pricing and the costs, and the second would be like demand issues. And the third issue possibly would be the impact of the Sharia, and whether that's a plus or a minus in terms of structuring green and sustainability Sukuk. Let's kick off first. If I could ask each panelist to give us their thoughts on what differentials they're seeing with the pricing and costs for green and sustainable Sukuk. Raja, do you want to have a go at kicking this off?
Thank you, and good afternoon to my fellow panelists, Richard, as well as the audience at large. So the ever-perennial question that I guess all of us keep on getting asked is the pricing going to be cheaper for me to embark on such a mammoth endeavor? And what would be the quantum of that pricing advantage? So in terms of pricing advantage, I think it's still fairly early in the day to sort of say that there is definitely going to be a pricing advantage. The reason being is that when we look at the market and and we look at the types of issuances in the market, they are staggered according to different tranches. So typically, you would get the shorter end being used as the ESG or the green Sukuk tranche, and then the longer dated ones would be in the conventional or plain vanilla format. That has now changed because Indonesia has just last year priced a 30-year green Sukuk. So they have actually taken the plunge to report on over a 30-year basis. So because the fact that you can't compare an apple to an apple, and there's not enough data in the market to directly corroborate one issuance against another in the same sort of tenor, we can't exactly say that by issuing a green Sukuk or in a green sustainable or sustainably linked format, you are going to get a better price versus a conventional plain vanilla Sukuk. But what we can say for sure is that the ability to issue a green, social, or sustainable Sukuk definitely opens up a investor base who typically may not even look at the product. And these investors typically are based in continental Europe. So in the days, and I'm sure Hitesh would share some of his experience as well. But in the days of foregone, we would typically start a roadshow. If it's an Asian issuer, we would go to Singapore, we would go on to Hong Kong, and then after that, we'll go on to the Middle East, and then we'll go on to London. And if it's a 144A, we'll go on to to New York. But since we've started to include the ESG green leg into some of these issuances, there's been a roadshow into continental Europe, Luxembourg, Netherlands, and so on. So because of the increased sort of the diversity in the potential investor base, what that means is that typically that should add to competitive tension within the book building process, and as a result, if the order book is in a certain size, then that should be able to impact in terms of the pricing compression. And that's what we saw. I mean, in terms of the deal that I had worked on, i.e. the government of Malaysia's Sukuk in 2021, which was placed about circa 42% green investors, i.e. the 10-year tranche. And we saw investors that we've never seen before come into the transaction, i.e. even look at the Malaysia sovereign issuance. And because of the overwhelming demand, we were able to compress the pricing by about 40 basis points. And then if we look at another aspect, which is the secondary performance. So in the primary, we are saying there's no difference, but the increased demand would affect the pricing during the book building process. It can impact the pricing during the book building process. But what we can see is in the secondary market, the data shows that sustainable or green or ESG bonds typically perform better in the secondary market, which allows issuers when they reassess the market, they price off the existing secondary curve, and if the comparable is trading in a very tight range, that allows them to take advantage of the new issue pricing. So that's what we see in terms of the secondary market performance. However, in 2022, that dynamic has changed slightly because obviously bond markets are facing a bit of an issue this year, and we've seen sort of distortions between ESG bonds issued by real estate, oil and gas, and generally other sectors as well. So the analysis keeps on going on. So I'll probably stop there and just elaborate further in the following questions.
Sure, that's very insightful. Thanks very much. Hitesh, I wonder whether you'd like to say a few words, especially in terms of the Middle Eastern context.
So I agree with the general kind of themes discussed by my fellow panelist Raja. So I think what we are seeing is obviously historically issuances in green format for Middle Eastern issuers have not specifically resulted either in any significant investor diversification or any significant advantage on pricing. And there is obviously a differential between bond and Sukuk pricing, but whether you're issuing in green or sustainable format didn't give you any additional advantages, right? And more importantly, I think for a lot of issuers who are issuing Sukuk for the first time, so the debut Sukuk issuers obviously found it very challenging to incorporate either green or sustainable elements into their formats. Of late, obviously, we've seen additional interest come in. I think in the Middle East, given bank treasuries and specifically those of Islamic banks tend to be very large investors. I think until they drive in the ESG agenda more strongly, we think a lot of issuers might still not be significantly incentivized to look at that format. The ones who are looking to issue in green or sustainable format obviously have the advantage, are looking for profiling positioning. They are looking to future-proof their financing. And, there might be a time when, they have much more pressure from stakeholders, including shareholders and management, to issue in that format. But at the moment, even though the demand to understand the product is very high, and there are a lot of discussions, I think given the shortage of Sukuk we've seen in the market, a lot of issuers potentially might take a few additional years before they incorporate these elements into their issuance.
Yeah, that's interesting. I mean, Sam, from the London Stock Exchange point of view, I mean, something that Hitesh sort of said about a lot of potential issues being a bit sort of put off by the extra effort that's involved, whether it's a green bond or a green Sukuk. I mean, that's a sort of indirect cost for any issue, whether it's conventional or Sukuk. I mean, do you have any sort of thoughts on that, or any other aspects in relation to the pricing and the costs involved?
Yeah, sure. I think, echo what the other two panelists have said with regards to, is there really a benefit of in terms of pricing with issuing green versus non-green Sukuk? I think what's interesting to see, though, is that in non-Sukuk issuance, there is definitely a pricing benefit for issuing green versus non-green, which then points to, is it to do with Sukuk? And I think really what it is it comes back to what we've been talking about before about investor education, because I think in the European market, investors are very, very well educated now on the different formats of ESG, and you do certainly see a big uptick in investor demand in the primary markets, which naturally increased demand on the day of issuance is going to lead to a better pricing outcome. You typically see enlarged orders from some of the more frequent investors, not necessarily brand new investors that are going to play in size, but you will see typically enlarged orders from those well-established investors. So I think really it's getting those players that are very familiar with ESG more familiar with Sukuk. So it's initiatives like this that I think will help drive that investor education and get people more familiar with the structure and the benefits that it brings. And then you will then see the increase in ESG demand in Sukuk that you do typically in non-Sukuk issuance, and then that should hopefully then lead to a big pricing benefit. With regards to reporting, I think there's no getting away from the fact that you do need to do reporting. I think it provides investors comfort that when you say you're going to do something, they can then get frequent, regular updates regarding the use of proceeds. Or if you're doing a sustainability linked bond, which has related KPIs, they can see that you're adhering to those KPIs and working towards reducing the targets, carbon emissions or whatever other KPI has been used. So I don't think we'll ever see reporting go away. I think it comes back to what was said earlier about the standardization of reporting. I think if we can come to a format where it's very easy to replicate, you then get experts in drafting those reports, and they can be done frequently with a lot of ease, then that should hopefully drive down the cost of that reporting and just make it easier for everyone. But I think just in order to provide investors comfort, and again just to help drive that investor demand, they do need a high level of reporting to be comfortable that the use of proceeds and targets are being met.
Yeah, thanks, Sam. It's an interesting point when you're talking about reporting of performance. I think my take is there is some concern about claims, not just in the Sukuk market, claims about a project being green or blue or sustainable. And when it's not, I mean, it's like every time you actually put on the TV and see a TV advert these days, the product is claiming to be sustainable. So I think the measurement of performance and the ability for people to really rely on that and compare one Sukuk issue with another is key. I just wonder, Raja, whether you have any thoughts on that in terms of your experience, in particular in Malaysia and the Far East.
Yeah, so when it comes to, I mean, first and foremost, having worked on a transaction myself, I do assure you that, that it's not very easy to get across the line in terms of these, in terms of labeling the product as such. Obviously, there's increased pressure on the second party opinion providers as well, to ensure that they are challenging issuers, and also there are times where there's also sort of gaps between what some of these SPO providers would expect of an Asian issuer, i.e. when it comes to certain standards of buildings, for example, or whether palm oil could be one of the sectors that they looked at, or could be financed, and when it comes to rural electrification, for example. So there's a whole slew of debates that goes on behind the scenes in terms of structuring sustainable or a bond for that matter, because they're just they're sort of red lines that companies or sovereigns have, and also national agendas at play as well. So so in respect of that, there's definitely a back and forth. And when it comes to, I guess, when it comes to reporting, that's definitely something which is important, and it's especially within the sustainability linked area as well. That becomes even more prevalent, because when you have a green or a sustainable sukuk, you have a clear use of proceeds. Monies can only be used for that particular earmark project, which has already gone through a very heavily debated process with the second party opinion provider. And also they need to report, obviously, on an annual basis, whether those use of proceeds were allocated accordingly and what was the impact of that particular financing. So they, where the reporting is done, they will need to say what was the particular impact from providing that financing to a specific project. Now, when it comes to sustainability linked, so this is obviously a new area in the Sukuk market. I believe to date there's been a handful. So Etihad issued the first one in 2020, which was a transitionary Sukuk. And Yinsen out of Malaysia has issued in 2021. Yinsen is the oil and gas FPSO provider, the 6th largest independent FPSO provider. So they were coming obviously from an industry which is, oil and gas, and they did a sustainability linked Sukuk, and they basically agreed to 3 KPIs, and the tiering of those KPIs were tiered accordingly to the severity of whether they do or do not achieve those KPIs. So yes, definitely when it comes to, the point about materiality of reporting, materiality of setting certain KPIs and benchmarks. And I can tell you that, not every second party opinion provider would want to give their stamp of approval on an industry such as oil and gas. So there's also that whole process of getting an SPO provider which is comfortable to sign off on it. And thereafter it gets into the process of discussing, do you have a transition framework in place to begin with? Because if you're issuing a sustainability sukuk, you can't just start from, I have no plans in place. You have to have, number one, a transition plan in place, something which is ambitious, something measurable, and then you go into setting your KPIs, and it needs to be, really according to the business. So a real estate KPI would be different from a, oil and gas industry, from a utilities company, for example. The KPIs need to be something which are measurable, something which is ambitious, and is in line with that company's transitionary plan. And just, just Richard, to close it off in terms of data, because I was just looking at a HSBC research report before this. There is, in terms of secondary trading of sustainability linked bonds. Again, these are bonds, but I guess we can learn from, it's a fixed income product at the end of the day. But what we can see is that those sustainability linked bonds which have GHG emission targets perform better than those which don't. So that's just some of the latest information coming out. So there are obviously, different targets that cover social as well as sustainable, but those which have GHG specific emissions tend to perform better in the secondary market.
Thanks for that. Hitesh, I wonder whether you've got any thoughts on that?
So I think that ties into the aspect, and I completely agree. I think there has been of late a lot of focus on ESG, not only on the Sharia compliance side, on the conventional side as well, right? And investors are obviously scrutinizing, much more than they did in the past. And that only then, I guess, has additional challenges for issuers, depending again, as Raja mentioned, what sector they come from and so on, to structure something that is, both ESG and Sharia compliant. So I think, it's one of we're at one of those points where I think the more stringent, I guess, the ongoing and future kind of obligations on issuers, the more I think some issuers, tend to shy away or postpone, structuring something in a ESG compliant format. It's not an easy, I guess, place to be in, given how the industry, at least in the Middle East, is still in its infancy stage compared to other parts of the world.
Thank you. Sam, sort of picking up from a couple of points that have come out of this discussion, and one is, and actually it's a question that's coming from the audience. Again, it may be too early in terms of data, but do you get any sense whether investors are holding these type of green and sustainability Sukuk through to maturity? Because with conventional Sukuk, there had been a problem with people just holding the Sukuk, and that held back the secondary market. And sort of as a follow-on from an earlier comment I think Hitesh made, in terms of the Middle East, in terms of bringing the various regional stock markets together to improve efficiency in terms of enabling more issuance to be made in green and sustainability Sukuk. Is that something you see on the cards, or would be a good thing?
Yeah, definitely. At the stock exchange, we have a number of partnerships with different exchanges in the Middle East and elsewhere, and the ultimate aim is to make it easier for domestic issuers to list their debt on international markets and the domestic markets, and make sure that they're able to take advantage of demand in both, especially where in certain cases the domestic market isn't able to fulfill the funding need of that particular issuer, just due to the size of that market versus what they could achieve in the international markets. Just going back to your first point on buy to hold investors, I think naturally you're going to see more of that behavior the longer dated the security is, just due to the nature of the investor that would need 30-year securities to asset match what they have in their, what their liabilities are. So you see that in other markets as well, with pension funds, insurance funds holding the longer dated paper to maturity. In the short dated, you're sort of 5 years and under, and possibly out to 10 years, you do see a little bit more trading. But I do think in general, trading in bonds and Sukuk products is typically short-lived. You don't see a lot of trading, say, a few months after the event. So you do still see that buy and hold behavior. But I'd be interested to hear the other panelists' thoughts on what they're hearing from investors, because I think they're a little bit closer to the investor side of things than we are at the exchange. But we're certainly trying to improve liquidity in bonds and Sukuk assets as well, and it's definitely part of our strategy at the exchange.
Yeah, thanks, Sam. Raja, Hitesh, did you have any thoughts about the whole?
I can add to that. So I think of late, in the last 2-3 years, we've seen some challenges for Sukuk in general, right? That impact the liquidity for green and ESG Sukuk issuances as well. So one aspect has been standardization of Sukuk format. So there is at the moment different standards in Oman versus UAE versus Saudi and so on. and that's obviously not very helpful. The second aspect has been, obviously, of late this year, there's been a lot of capital market volatility. And when you combine that capital market volatility with very, very strong liquidity from Middle Eastern banks, what we've seen is therefore a massively reduced issuance volume from the region, and therefore a very strong increase in appetite for Sukuk out there. And because not as much is available for investors, we are seeing a very stark difference in the way some Sukuk are trading, vis-a-vis bonds from the same issuer. In some instances, that difference is as much as 100, 150 basis points. Right? So I think there are a few challenges inherently. So if you were a Sukuk issuer today, you really need to be incentivized beyond just a positioning or a profile play to be, to issue in green format. Because if you were to issue in even traditional Sukuk format, the investor base out there for you is very, very large and is already giving you a pricing advantage versus a bond as of today.
Mm. And Roger, do you have anything to add to that?
No, I think they have covered it very well.
Okay. I thought I might just touch on the issue of the Sharia and the Sharia scholars' involvement, and what you are finding in practice as to the extent that the Sharia scholars are involved in reviewing sustainability or green principles in a Sukuk, and the extent to which they are or should be involved in monitoring whether these sustainability or green goals are actually being met, or whether that's something which is unfair to ask them to do in terms of their particular expertise. Raja, do you want to kick off with that?
Yeah, so interestingly enough, what I'm seeing, at least in terms of the Sharia Committee of our bank, is that they're actually learning from the whole ESG journey. So in the past, I'll give you an example. In the past, typically when you get when you do a Sharia compliant issuance, you would get the Sharia Committee to sign off based on the transaction documents. Sure. And what is stated in the transaction, nothing beyond that. Right. So if the use of proceeds is stated as such, then the Sharia Committee would debate whether that use of proceeds, is in line with acceptable practices or otherwise. And once that happens, then it's up to the issuer on an ongoing basis to essentially, they provide covenants in the documents that they will use the proceeds in line with what is stated in the documentation. And any deviation from that would be, an event of default. But what has happened now is that the Sharia committees are starting to look at, beyond. Just beyond that, they're starting to ask questions. Should we also be looking at this? Should we be looking at the use of proceeds on an annual basis, as opposed to just taking the issuer's word for it? So there's sort of learning. To say that where this lands, it's something, but they're sort of seeing that there's an increased diligence on scrutiny on greenwashing, so to speak. So should we look at Sharia washing or impact washing as a sort of next step for ourselves? So that's one. And then on the other side of things, they're also starting to learn. They're starting to take cue from the industry in terms of, this is more towards banking products, but they're starting to look at what are some of the financing that we're doing. Is this really in line with the Maqasid Sharia? Is it really providing an impact, is this the kind of financing that we want to do? So, I would say that there's not really any conflict in terms of what I see between Sharia as well as the, second party opinion providers, but they're learning from one another, in particular towards the impact or the use of proceeds or, reporting to that extent.
Yeah, Hitesh?
So I haven't yet, thankfully, come across, Sharia committees wanting to be more involved in, green or sustainable Sukuk elements of the issuance, right? I think there is obviously an inherent challenge there. What do we do when Sharia doesn't agree with a second party opinion, a year or two from issuance, right? And that impacts the way it trades, that impacts, whether it's still Sharia or ESG compliant and so on going forward. So At the moment, what we've obviously seen is, as I think Raja alluded to earlier, was in a way 2 separate work streams. You have a approval on the transaction documents and the structure and use of proceeds from the Sharia compliance from the Sharia committee, and then you have a second party opinion that then has obviously an overview and say on the ESG compliance of the security, and I really hope it stays that way.
I mean, Sam, I had these discussions many years ago about with conventional as well as Sukuk, if the Sharia scholars later on were to be involved in reviewing the use of proceeds, and they found it wasn't Sharia compliant, and that gave them the right to demand the issuance be repaid, that I think would cause some concerns in terms of getting the investors on board on day one. I'm not saying that the Sharia scholars shouldn't be involved, but there clearly are some pros and cons in that. But I suppose from a stock exchange point of view, if you were an issuer coming to the market and you had that type of provision in your prospectus documentation allowing the Sharia scholars to terminate the issuance early if they felt the proceeds were not being applied in a Sharia compliant manner, that might be an issue.
To be honest, I don't think it is, and
Okay.
the reason is that I think with the reporting that we see, and to compare it to ESG, the reporting we see there on an annual basis, showing people that the use of proceeds are being used the way they said they would, targets are being met, I think gives investors confidence rather than nervousness on day one about what they're investing in. And I think the same for those that have mandates where they can only invest in Sharia compliant finance, they will then get comfort that someone is looking at this on an annual, whatever the time frame is, on an annual basis to ensure that it is doing what it said it would. I think if investors thought that after day one, there was a risk that the proceeds could be used for other purposes, then I think they would be more nervous. So from an investor's point of view, I think more reporting, more information and more transparency is only a positive. And, maybe there are some investors that aren't in the market because they don't think there is that transparency. So you could see more investors be more comfortable with the structure if there is more reporting. Of course, that comes back to the point we were talking about earlier with the cost that comes with ESG reporting. And of course, that would then lead to additional costs of Sharia reporting. But ultimately, if the goal is to bring more investors in, then ultimately you would expect that again leads to a pricing benefit. So I think it's right, like Raja was saying, about ESG authenticators and scholars learning from each other and trying to see where there's overlap and where they can work together. I think can only be a positive for the resilience of the market and the confidence that investors have when they're investing in these products.
Interesting. Have you ever come across a case where a conventional green bond that's been listed has actually had to end early because the reporting is being adverse down the line? I can't think of any, but
no, not that I'm aware of. And I think, the fact that these companies know that they've got to report on an annual basis, it does just ensure that incentives are aligned between them and the investor so that they are doing what they said they are, because they know that they have to report on an annual basis. And once, the capital markets have long memories. If you've done something if you haven't done something you said you would, people do remember that, and that has an impact on you going forward. So I think in any case, people are incentivized to do the right thing and do what they say they do, but that reporting just adds that additional layer and additional confidence for investors.
That's a good point. Okay, just got a question that's come through. I don't know whether anyone wants to put their hand up to answer this, but any thoughts from the panel about issuing Sukuk on the blockchain? Raza, have you got any thoughts on that?
Yeah, I think
Can't hear you, Raja.
pardon me. Sorry, I think that's a good question and something that we hope to see moving forward, because I mean, obviously on the blockchain, you have the incorruptibility of data. This whole settlement process could be simplified in terms of the placement to investors. Documentation could be kept on a ledger, for example. So, as I think there has been certain test cases, at least we've seen in this part of the world. Temasek, which is a sovereign wealth fund based in Singapore, it's the Singaporean sovereign. They issued a blockchain bond, just a year ago or the year before. And there's some activities at least being done in terms of the National Stock Exchange in Malaysia, Bursa Malaysia, looking at that. So yeah, moving forward, I do hope that something to that effect can be done, because I feel that the whole incorruptibility of information, settlement, storage of documentation, and so on could be simplified. And even we're talking about tokenization and things like this. These are definitely areas which are potentials for the future.
Hitesh, has there been any?
So I think there is, if I'm not mistaken, there was a small tranche of a Sukuk also put as a test case on the blockchain. I think the challenge is for you to effect a large public Sukuk issue in that format. It only means the infrastructure for that needs to be enabled for all stakeholders, right? It needs to be enabled for the issuer, for all the investors, and so on. Is there hope? Absolutely, for that to happen sometime in the near future. I think we're just a few years away from that, unfortunately.
Sam, in terms of the London Stock Exchange, has there been any sort of recent sort of moves in this regard?
Yeah, so part of the London Stock Exchange's strategy is to help and be a part of the digitization of the capital markets, and blockchain and tokenization, DLT, is all aspects that we're very interested in. I echo what the other panelists have said. I think we're seeing these test cases now, but I think we're still a little way away from it becoming commonplace. And I think at the moment people are still trying to ensure that it can deliver what it says it will deliver, which is, of course, as Raja said, the incorruptibility of the data, as well as settlement at T+0 if possible, just because of how quick and efficient it can be. So yes, we're definitely looking into this as part of a strategic point, but yeah, I don't see any reason why this can apply to Sukuk and of course more generally than that. But yeah, I think we're still a little way away from that.
Okay, thanks. I think at this stage, I'd perhaps like to ask each panel member just to give a couple of minutes of summary of their thoughts, the good things that in terms of direction of travel, and things that need a bit more work on, perhaps. Sam, do you want to go at summarizing your thoughts?
Yeah, sure. Maybe if I just focus on the ESG aspect of things. I think for issuers at the moment with the ESG market, I think it's important that people do take a look at this seriously. I know that within Europe, where ESG is a real focus for investors, even for non-ESG issuance, the ESG nature of an issuer is still looked at and part of their consideration. The benefit of then making that particular issuance ESG is then what we've said before, is it leads to increased demand. I think what's encouraging to see in the market now is the development of the sustainability linked bonds on the stock exchange. We saw Riyadh Bank issue the first sustainability linked AT1 bond on our exchange earlier this year. So the development of that market, which allows issuers a little bit more flexibility in terms of what they do with the proceeds, I think is a real positive one. With the use of proceeds bonds, of course, by the very nature, you have to invest those funds into a particular a particular project. But when you have a sustainability linked bond where as a company overall, you have to hit certain targets related to carbon or other KPIs, it allows you more flexibility in what you do with those use of proceeds. So I think we'll see a growth in that particular area. We've seen growth in that area in non-Sukuk issuance as well, and I think that will translate into the in the Sukuk market. Again, just to re-echo a point that I said before, I think really to really make sure there is that differential between green and non-green Sukuk issuance. I think the focus is less on the ESG education in Europe. I think the focus should be the education on Sharia compliant issuance, because once those that don't have Sharia compliant mandates specifically are willing to then play in that market, I think you will definitely then see that differential between ESG and non-ESG Sukuk issuance. So it's initiatives like this and panels like this that should hopefully drive that education piece, and we can really start to see the benefit of issuing ESG Sukuk structures.
Thanks, Sam. And Hitesh, have you got 1.5 minutes, 2 minutes, just a quick summary?
Yeah, sure. So I think, obviously, no doubt that the future is bright to be able to have more ESG, Sharia compliant ESG issuances from the region specifically. There has been a lot of dialogue, a lot of discussion, a lot of requests to understand, these aspects better. I think just to add to Sam's point, I mean, for us, investor and issuer education is key. The investor, obviously is extremely sophisticated and knowledgeable in Europe, but from a regional perspective, that forms 60-70% of the investor base for most of the Sukuk that comes from the region. I think there is more work to be done.
And Raja.
Yep, just agree with my fellow panelists. I think the future is exciting. We have obviously seen a remarkable growth in the size, which ESG related Sukuk, so including green, sustainable, and sustainability linked, account for about 5% of the market in first half 22, and we look forward to see that grow, and the kinds of issuers as well diversify. So with the market starting with sovereign issuers have now moved on to corporates, and we have seen financial institutions, and we've seen the various types of issued senior debt, additional tier 1, and then moved on to sub debt. And also in Malaysia, we have a very robust project financing market as well. So you can finance greenfield projects in Sukuk format. So a lot of the transitionary projects, i.e. the solar power projects, the hydro projects, as well as waste to energy, are being financed in Sukuk format as well. So we're very encouraged to see that. There's a very robust framework that the regulators provide to incentivize it. I do hope to see, in line with the blockchain question, as we move forward, I do hope to see a lot more nature-based solutions, as well as blue solutions, which we saw presented by our colleague from the London Stock Exchange earlier, because this would be the true essence of, obviously Islamic finance, which is more social in nature, and therefore we would love to see, these kind of solutions coming in Sukuk market as well.
Well, thanks very much indeed. It's been, from my perspective, it's been a very interesting discussion. I hope everyone that's been listening in thinks the same. I'd like to thank all three of you, and also Mustafa for this earlier presentation. I think one interesting point I took out of a quick look at that report that you are working on, Mustafa, is the fact how small at the moment the Sukuk market is in terms of ESG Sukuk, and that means there's a huge possibilities for growth, and it's a combination, I think, of education, both investors and governments, in terms of helping this particular type of capital markets product to develop. I was reading somewhere one idea would be more privatizations in the Middle East to encourage those privatized companies to enter into ESG Sukuk. Clearly there are differences in terms of the geographical location that you're operating out of. But again, I think as Sam mentioned, these initiatives hopefully will encourage exchanges of ideas and allow there to be learning from each other's experiences. Just as a couple of housekeeping points, there are going to be some further sessions tomorrow in terms of Islamic banking and investing. That starts at, let me get this right, 9 a.m. BST, and social finance at 11:30. Finally, I just want to mention the Islamic Finance Council is going to be partnering with Global Ethical Finance Initiative in unlocking Islamic finance as a work stream as part of the Path to COP28 campaign. And this is going to be launched on Monday, 24th October. And I think Chris Tate is going to be putting something up in the chat box with a link for more information. I think, with that, I'd just like to, again, thank everybody for participating and thank everyone for speaking on the panel and Mustafa earlier on. And with that, I think we'll draw the session to a close. Thanks very much again.
Thank you, Richard. Thank you, everyone.
Thanks, everyone.
Thanks, Richard. Thanks, everyone.